David here from Freedom Founders. Today, volatility. There's a lot of volatility in the markets these days. In fact, there's more volatility now currently than there ever has been before. But there's always been volatility. There's always been economic cycles. And we have to just accept that as a fact. Now, here's a fact that I don't think you need to accept. And if you know me, you've heard me before, you know I do have a strong bias towards alternative investments, particularly in real estate, as opposed to the financial markets being Wall Street. That doesn't mean that everything Wall Street is bad. But here's what I do know. The traditional financial model tells people that you should accumulate. Save money, accumulate, put it on Wall Street in whatever construct, 401ks, stock equities, bonds, annuities, whatever, index funds. Okay, I get it. I'm not going to take any course of action there. But here's the problem I have. Is they'll have you, financial advisors who work on Wall Street, will have you put your money with them or through them into Wall Street constructs, investments, and have you ride that up and down cycle over your lifetime, right? It's up and then it's down. It's up and it's down. They say, oh, but stay with it because consistently you're going to get 7, 8, 9, 10%. I don't know what they tell you today, but you know what? They're playing with the numbers because every time you take a drop of 20, 30, 40, 50% back in 2008, getting back up to even means you've got to earn a corollary of much more in the return than you did on the loss. Let me put it in other terms. It takes a lot of time to get back up to even. So if you lose that time going down and back up again, you lose, say, a decade. How many decades can you afford to lose? You really can't. Maybe when you're 20 or 30 years old, but when you're 40, 50, 60 years old, you can't afford to lose another decade. What do financial advisors tell you to do when you say, hey, I'm going to sell my business. I'm going to stop trading time for dollars. In other words, no more active income. What do they tell you? Oh, then we're going to change your portfolio allocation. We're going to move you from equities, the stock market, to more in bonds or CDs or T-bills because we've got to preserve your capital. Well, what the heck were they doing all those years when they're putting me on the market or putting you in the market with volatility? Look, you understand what I'm saying? So the uncertainty of the financial markets is what causes way too many people to have to work much longer than they have to. They're told by financial advisors they need to accumulate $6 million, $8 million, $10 million to have enough to drain or dilute or deplete over the years of their retirement. Ridiculous. They never taught you how to orchestrate cash flow because they can't orchestrate sustainable, predictable cash flow. Not when the markets go up and down like this. Now, real estate, if you do it the right way, it's an inefficient market. It's very local. You can control that volatility and get what you really need, and that's sustainable cash flow. That's the game, is cash flow, not accumulation. Accumulation means nothing in a volatile market. Cash flow indexed to inflation, that's what you need. It's in alternative investments. It's what we do at Freedom Founders. If you're even considering trying to let go and wanting to do it faster, safer, you owe it to yourself to check us out. This is not a sales pitch. It's just if you want to be in the game and learn how to exit from your practice, particularly if you're within 3 to 5 years of doing so, now's the time. Don't wait. Now's the time to get on board because we're going to have another reset within a relatively short period of time. I promise you. And it's not going to be pretty. People are going to get sucked into it again. They're going to lose a lot of capital, and they have to stay on that treadmill for more and more years. Don't let that happen to you. Remember, always stay focused on your freedom. I'll see you next time.